Right, hello, and welcome to today's podcast for the trading week ahead from the 28th of September to the 2nd of October 2020. My name is Adrian Boothie. I'm the head of trading here at Trend Signal, and joined as ever in this podcast is Jerry Miller, our chief analyst. Hello, Jerry. How are you?
Hello, hi. Yep, not too bad, not too bad.
Good. And as ever, what we're going to do is take a look at the key drivers for this week ahead. It's these events, these announcements that generally stimulate movement, whether that on currencies, indices, commodities, and we've got a reasonable week of data, 2 or 3 pretty major events this week. So let's jump straight to it. Let me bring my calendar up. And Jerry, do you want to kick us off with, what we need to know for this week?
Well, it's what's not on the calendar that's the important stuff this week, actually, than actually what is on it as much. This is really an economic calendar, so it's largely giving the sort of data and economic releases rather than a sort of big macro events, and it's those big macro events that I find the most interesting. So, and one of the most important ones, well, Brexit, we can come on to in a second, but is this first presidential debate. This is the first of 3 presidential debates between Biden and Trump in the run-up to the November the 3rd election. Televised debates, and that's the first one Tuesday evening, Adrian. So, worth sticking up till 1 o'clock in the morning. I don't know. What do you think?
Probably be tucked up in bed at that point, but it definitely has the ability to create some movement for us over the next few days. That's for sure.
I'd say, yeah.
And I know we talked a little bit about the different policies in our other weekly podcast just a bit earlier today, where we just review what's been happening. So if you want to find out a bit more about their policies and which way the market's likely to move, particularly the stock market, make sure you tune into the Trend Signal Trading podcast there. But otherwise, Jerry, let's go through the other events, shall we?
Okay. Well, kicking off Monday, central bankers do dominate our calendars. We don't have any major policy meetings this week, but we do have central bankers talking, and I often get asked the question, why do we care about what they're saying? They're always talking. The thing is, central banks don't always let out exactly what they are wanting to say, what they're really feeling, and it's sometimes in these press conferences or Q&A sessions when a governor or a member of the rate setting committee for a central bank makes a comment that you think, right, okay, so they are thinking of negative rates. It's a bit like what happened over the weekend with one of the rate setting committees members suggesting that negative rates wouldn't be so bad, and it's been quite effective in Europe. But then again, I was listening to a chap from Aviva, I think, on Wake Up to Money, who basically said that negative interest rates were not the sort of cure-all, really. It had significant side effects, a lot of collateral damage. So,
curious that such a comment over the weekend has led to a rally in the pound today.
Well, yeah, there you go. Yeah,
take it with a pinch of salt, perhaps.
Yeah, that's a very good point. Well, and maybe because that it's unlikely to lead to a drop in rates, certainly into negative territory for quite some time just yet. And there's a lot of other bumps in the road, notably, obviously, the Brexit trade deal and the final divorce when we are officially outside of the EU from 1st of January next year.
So Michael Gove is in Brussels today, isn't he?
Yeah, that's the just to discuss the sort of divorce arrangements. So that's like a precursor to the end of the year, but that's not the start of the talks. The talks actually start on Tuesday, so that's Mr. Frost, our chief negotiator, heading to Brussels for this 3-day series of talks with Michel Barnier, representing the EU and his trade team. And I think both sides are saying these talks need to make substantive progress, so that which could or will lead to what Barnier calls these tunnel negotiations. And I think between you and me, that basically means Frost and Barnier agreeing all the key issues, the remaining key issues, which are the EU's fishing rights in UK waters, and also the EU's demand for this so-called level playing field, where they are concerned about state aid in the UK, how it might affect and give a competitive advantage to certain industries. So once those are agreed, then they do these tunnel negotiations where they thrash out all the details, and it's important they get all that done because it's all got to be approved for the 15th, 16th EU summit. That's the 15th and 16th of October. So
Yeah.
You'd expect it to be concluded, the main issues to be agreed upon, so that the details can be thrashed out ahead of that meeting.
Yeah. Okay. All right. Economic data wise, we have US consumer confidence, sort of an item of data that you and I both like, Jerry, although in their wisdom, Forex Factory put it down as medium impact. But why is it a bit different to others?
Well, because we like looking at leading indicators. Anything that's going to give us a clue as to what's going to happen in the future is always helpful to investors, helpful to traders. And this is a survey of households, as this detail is telling us here.
Mm.
But if consumers are confident, if they're happy, they will spend money. If they spend money, those companies that are providing those services or goods will do better. They will make more profits, hopefully, if because that's what their business is ultimately what they need to do. And if they make profits, their stock price will go up. And if their stock price goes up, everyone's happy, including the government, who will make more taxes. So it's a very positive number to look at, as opposed to the final reading of the US second quarter GDP on Wednesday, which is the complete opposite. That's telling us what has happened a long time ago, April, May, and June. It's one of 4 readings, but there's going to be no change. It's almost written in stone, really, by now.
Yes, because effectively you have as I say, when it says final, does that actually mean final, or have we got another one after the
Yes,
final one?
it's a bit like the prelim numbers preceded by the advanced reading, and you just think, but surely prelim is the first one. It can't be. It can't be the second one.
You ran out of adjectives. Just don't know what to call it anymore.
Yeah, what should we call it?
Okay. All right, and then we've got Lagarde speaking again as well on. It's definitely his week. Lagarde's week this week, and of course it was
Jay Powell all last week. Yeah, he got hit with 4, didn't he? It was every day pretty much. So and then on Thursday, China's got this golden week, which I can confirm from my daughter's perspective. They have both Thursday and Friday off, but she says that really China's shut up for the whole week, really. So, and that's always a little bit of a concern for the authorities, but I think they're just making sure that not too many people are commuting all over the place. And I know that Hong Kong won't let any Chinese nationals in at the moment, especially over Golden Week, because they're just absolutely paranoid. In fact, I was going to go and visit my daughter in Hong Kong, but they've got a mandatory 2-week quarantine period now in a hotel, in a government-controlled hotel. So if you go to Hong Kong, you won't. You won't go for a 1-day business meeting because it just won't happen. You have to go straight into quarantine.
Room service for 2 weeks.
Yeah, and you have to pay for the hotel. Yeah, it's not good. No, it's there's no reason to go to Hong Kong now for sure. Anyway, so that's the public holidays. Thursday, important day in the run up to the actually Wednesday. Sorry, I should also mention the ADP employment change. This is the private payroll company that has its own take on the employment picture in the US, but it's really a bit volatile, and I don't think investors and traders, we don't put a lot of weight behind that number, but it can be interesting. So that's the first one. What I would say is that these numbers are going to be particularly important this week, this month, I should say, because there are signs that this recovery is slowing down, that the employment picture is not recovering as quickly as perhaps the authorities would hope. And let's face it, Adrian, unemployment was about 4% pre-pandemic. It's going from 8.4 to 8.2, according to forecast for this Friday's number. So the ADP data, yes, it'll be interesting. And then on Thursday, we've got the weekly unemployment claims, the initial claims by anyone being made redundant. And there's still 850,000 people potentially claiming employment benefits for the first time. So it can't be going that swimmingly. I'm just surprised how stubborn that number remains so high.
Yeah,
Um,
absolutely.
a-
But then,
and y-
non-farm employment change, that'll be closely looked at on Friday because that's the number of jobs created over the prior month. So it's a net positive 900,000. But of course, that's significantly down on the prior month. And of course, we always get revisions as well, don't we? So they're going
yeah,
to be very closely looked at too.
I think it's something that Fed will be a little bit concerned about, and I think that the government, uh, the White House, is unlikely to be able to get any state aid through Congress at all
Mhm.
ahead of the election. So, politics getting in the way again. But well, unless the two sides can agree, but there's polls apart at this stage. Not that poll, but yes, they are polls apart.
Yeah.
POLES.
Yes. Yeah.
But I certainly think markets are going to be particularly sensitive to any undershoot of these numbers, or any signs that the recovery is faltering even more.
Well, just just very quickly, Jerry, the employment data is very important in the US as well, more so than perhaps in other countries, just because of FOMC's the Fed's mandate. Jerry, isn't that right?
Yeah, that's right. So unlike a lot of other central banks, the central bank in the US, the Federal Reserve, they have two mandates: to foster full employment as well as maintain price stability. So that's something. So any reading of employment data will alter and influence Fed thinking on their monetary policy. That's the reason why employment data is so important. So all eyes are on it. It
Yeah.
affects all our markets: stock markets, bond markets, currencies, and commodities. They'll all be affected by this.
So, I mean, when you're looking at the sort of the main data points for any week or any month, typically non-farm payroll, usually the first Friday of the month, is a very important part of it, and probably the most important. It's probably the item of data that creates or has the potential to create the most movement, other than the interest rate decisions and statements themselves.
Yeah, that's right. I was going to say interest rate decisions and employment data, and obviously elections as well. But you don't get many of them in the year. Ironically, we do have one coming up, of course, the 3rd of November. But
Yeah. Well, there we are. So we'll have our pencils sharpened for that. Jerry, anything else to cover off on? Or we pretty much there, do we think?
no, we are pretty much complete. I was just looking at the calendar for November, Agent. So the election is on the 3rd, is it? The 3rd
Third.
of
Yeah.
November. And then you've got non-farm payroll on the 4th.
Well, haven't we got the Fed on the 5th or
Uh,
something like that? It's
I
or
think
on the 2nd or something. It's
uh,
literally it's a pretty big
is the
week.
election? No, the election's on the 2nd. Is the election on the 2nd? I'm getting confused here. Anyway, whatever it is, the likelihood is that we've definitely got the Federal Reserve the day after the US election, and then we've also got non-farm payroll. Could be a bit of a car crash.
Yeah,
That will be an interesting week. I would
definitely.
definitely worth staying up late for all of that lot.
Absolutely. Good. Okay. Well, I think that's largely it, everybody. So thanks very much for listening to this week's podcast. Hopefully that sets you up for the main events for this week that are likely to stimulate some big movement there. So I guess the main events really sort of Tuesday, Brussels talks, and also the first TV debate. And remember that all important non-farm payroll on Friday, 1:30. So definitely, if you're a day trader, have that set in your diary so you know when perhaps to be out of the market at that point. Then you can look to start to pick up some opportunities, perhaps on the reaction to those major events. Otherwise, if you'd like to learn a bit of strategy and you want to know how to take on these markets, why don't you come along to one of our events? And in fact, we've actually got one at lunchtime on Friday ourselves, so we'll be online live during non-farm payroll as well. So if you want to come along and book yourself a free place, we'll be looking at live markets, looking at trading opportunities, and teaching you one of our favorite trading strategies. Just get yourself booked in. You can go to our website, trend-signal.com, or you can go to this specific landing page for our events, bit.ly/learnts, so bit.ly/learnts, and get yourself booked in. We'd love to see you online. But otherwise, have a wonderful week's trading, and we look forward to seeing you again next time. Bye-bye for now.